Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The grain markets have been the recipient of a number of factors that has put pressure on futures prices. We've seen great weather. We've seen a harvest that's progressing rather well. We've seen a bit of slow demand this week, and we've also been seeing producers selling at resistance. This combination has really set forth for us a market that we're seeing a bit under pressure, but is still fairly holding its own, but we're not surprised to see a bit of a pullback right now after having seen a moderately good advance. Right now, as we look at the December corn contract, we can see we had fantastic resistance up against volatility-based resistance that we spoke about over the past several weeks. You can see the market essentially made a double top against this area of overlap, and the second attempt as it made it through here, the market was not able to get through, and that was in conjunction with the market being overbought, and we can see now the market is now turning down, and what we would expect is for a nice pullback or retracement of this range where the market could potentially find some support. A couple levels that we're looking at for that area would be around the 324 and a quarter mark or 331 and 3/4 for potential support. The 324 and a quarter number coincides with a point of control level of 328. So we would not be surprised to see that pullback come in somewhere in the neighborhood of 328 to 332 or so. Would be a very good level for a pullback to come in, especially as we're approaching the November 9th timeline for the next USDA report. The last 2 weeks, we discussed how the market came up to resistance and how it would be very important to note how the market reacts off of these recent highs, looking for continued strength if it was able to close above, but continued softness if it were to continue to trade below. We were also looking at the manner in which the market had been tracing this trend line. And as you can see today, it's broken here very well, actually both today and yesterday. And as long as it stays below here, we're looking for the market again to continue lower before it can find reasonable support down below. Here we can see that the March contract is trading in the exact same manner. We have the overlap of volatility-based resistance for the market coming in. Resistance held very well. The market was not able to get through this level through the first attempt. We're now making our way back down again. And then support down below, we're looking at about 344 for potential support down below. As the market makes its move down, that's coinciding with the stochastic also moving down. So once it reaches an area where it potentially looks to be oversold again, this is where we might be looking at potential support for the market to turn back up. Once again, we've looked at the range of this move from the low up through the recent high. Taking that move and looking at potential retracement levels, we're looking at support coming in somewhere in the neighborhood of 342 or even 336. That 342 number essentially mirrors the 342 point of control number. So we would look for very good support somewhere in the neighborhood of 336 to 342 coming into that November 9th timeline for the market to potentially turn back up again. As far as the soybean contract is concerned, last week we talked about how if we got a close above 1,002, that the market should make a move or at least make an attempt at 1020. In a very impressive move, what we saw is the market actually got that close above that 1002 number, and the exact high the next day landed at 1020. Since that time, the market actually has been moving down, and we're looking for continued softness given the nature of the supply narrative for soybean itself. We're not certain as to whether or not the market's going to be able to make it back down below previous lows. Yesterday was first notice date. And so again, there's not going to be much more in terms of this contract that we'll be looking at. Going forward for the January and March contracts is more of what we're going to be looking at for key support resistance levels. Here in this chart, we can once again see the power of volatility-based support and resistance. This view of the January beans contract shows us that as the market came into volatility-based resistance, that the resistance was very strong, touching right up against the band, and the market turning back down from there. Here we're looking at potential support then coming in down below, somewhere in the neighborhood of 925 or so. So that's going to be very key for this market if it continues to find weakness to the downside. And the timeline that we spoke of before, the November 9th USDA report, happens to coincide with the November 8th timeline that we presented to you several weeks ago. So November 8th, November 9th / November 10th appears to be a very important timeline that we're looking to see a potential turn or pivot in the markets in general, given the nature of the strength of the report that's due out. In this chart of the January beans contract, we wanted to actually show a couple things to you here. First, when we have an intersection of several trend lines coming in, their intersection points, when we project a horizontal line from that point, will often be an area where key resistance or support can occur. We see this happening here just below 1030, where the market came in, found great resistance, and then has turned back down from there. Second, we talked about how these trend lines can also project for us the speed of the market. Once the market breaks or deviates from the speed of that market trend line, it will then gravitate to your next trend line where it will look for its next speed. Now, we have another key intersection point occurring, lo and behold, near that November 9th / November 10th timeline. So what we would be looking for here potentially is for the market to continue down now that he has broken away from that particular trend line, make its way either to the intersection point or make its way to the next trend line before it's able to pick its way back up and maybe trace back up the next trend line. So we'll continue to monitor this, but it's very important to understand the nature of the trend lines as they occur to help to give us a roadmap as to the movement of the markets in advance. According to the USDA, wheat is over 80% planted right now. And as we've talked about before, the potential low coming in for wheat probably occurred last week. And unlike its two counterparts of soybean and corn, it has actually been a bit stronger than the other two markets. The market is sitting well above the 412.5 to 413 number that we talked about last week. Is what we're looking at now is the potential for the market to garner some strength. Previous pivot high beforehand is going to be key level of resistance here. If it's able to get through this area in a strong fashion, we'd be looking at a very nice move to the upside as the market makes its way up and potentially finally reaches being overbought. And if it's able to garner some strength, we would be looking for continued strength at the very least through the month of November and potentially through December as well. The speed of the wheat market's advance appears to be pretty slow right now given the trend line that it's been tracing. We have a timeline sitting somewhere in the neighborhood of November 18th for a potential turn. And so we would not be surprised to see the market continue to creep its way up into late November, right before Thanksgiving. Overhead, we have 441 as a potential price objective, 441 3/4. The market continues to simply trend sideways in this fashion. Maybe over the course of time, we may see him continue to climb. If not in November, maybe in December, but we like that 441 3/4 number for this contract. Our work on the December crude oil futures contracts continues to be very, very great. As we're looking at the chart here, the market continues to roll down. And last week, we shared how testing the previous lows, there was a good chance of that occurring. And as we can see, in spite of the recent pipeline explosion, that the markets have not actually turned back up, but has continued to move down. So we can see after reaching key resistance, the market has had a very tough time turning back up. We talked about how it needed to hold somewhere in the neighborhood of 49 or so, breaking below 49, and its inability to recover back above 49 put it in a position where continued weakness was more probable. And that's what we're seeing right now. And so we're looking at a minimum price objective for this contract in the neighborhood of 43.70 to 43.50 and possibly lower. The takeaways that we would leave you with today, as far as corn and soybean are concerned, look for a little bit more softness as we approach the November 9th timeline, either softness to sideways movement. Wheat looks like it may have put in a significant low and may in fact continue to trend sideways to up. And then lastly, as we talked about the crude oil, looking for it to touch our minimum price objective somewhere in the neighborhood of 43.50 to 43.70. Thank you so much for joining us for our weekly market wrap up, and we look forward to touching base with you next week.